Good. 2 minutes past. Let's make a start then. I'll add other people in as they join. So welcome to today's session then of the Tax Lab. This is the third one of these that I've done. The whole point of them really is to give you an insider's view into my brain essentially for when I'm tackling these real life tax scenarios that we get on the job, so that you can learn from them and adapt and improve your own approach to things and become a better all-rounded tax professional. So today we're going to focus on research skills, which is probably my favorite topic out of everything. By research skills, I'm just thinking of everything that relates to looking up the answer, interpreting what you read in, applying it to come to an answer, and all of that good stuff. So we've got a real scenario today, actually from my own team. So I work in employment tax. I run an employment tax team, and this is a fairly recent client scenario that we've got. So obviously I've anonymized it to not let you guys all see into the client and the people. But other than that, completely true. So we've got a company here. So this is what the scenario is going to be based around. We've got a company here called House Lettings Limited. And of House Lettings Limited, we have two directors, Sally and Bob, not the real names. Sally and Bob are both directors. The owners and sole directors of House Lettings Limited. They both have personal cars, their own cars. They're not company cars, so they own these cars themselves. And what they were doing is when they were filling up these cars, they were using a company credit card to fill up those cars. So rather than pay for it themselves or rather than reimburse them money for that, the House Lettings Limited credit card was being used to pay for those things. So those should have been the use of the credit card to purchase that fuel should have been reported on a P11D by House Lettings Limited. They didn't do that as an accident rather than intentional. And it only came to light during a HMRC inquiry that they had not reported this on a P11D. And so throughout the inquiry, my team actually helped them to disclose that and to fix that situation, and that was all good. But as we were going through that piece of work, I just thought, oh, this is a shame that they haven't just paid the 45p per mile for business miles because they could have extracted some tax-free money from the company. It would have been much more tax efficient than what they've currently done. So my idea was I wonder whether they can now reimburse them that 45p per mile, essentially, so that they can extract that money from the company, tax and national insurance free. So that was the start of this research that we now want to do. We basically want to figure out whether this company, House Lettings Limited, can pay this 45p per mile for the business miles that the directors have done in their personal cars. So that's what we need to go. That's what we need to move towards. So in this case here, where I'm going to start is I'm going to start in Corona I. So Corona I is my starting point for probably 95% of the research that I do nowadays. I find it the most easy to use, and so I pretty much start here all the time. Because I've worked in employment tax for about 10 years at this point, I actually know that the rule around the tax about this is in the Income Tax Earning and Pensions Act 2003. I just don't know off the top of my head what the section number is for that. And so there's a few ways that I can now go to try and find that. So I want to find the rule, the exemption that says you can pay this tax free, 45p per mile, so I can look into it and see whether it will allow the company to now pay this out. So I'm just going to start doing some searches to find some guidance around that in Krona, and then hopefully that will link me to the legislation, and then I can have a look at that and hopefully get to the bottom of the tax side of this. So let's start doing that. Let's just say director fuel reimbursement or something like that, just to get the ball rolling on this. Okay, so this here is providing something helpful. So directors can receive fuel reimbursements through two main approaches. Either the company pays for all fuel and the director reimburses private costs. So that sounds to me like it's talking about company cars there. So I'm going to just make it clear that they're talking about private cars, not company cars. So nothing particularly useful seems to be coming up here at this point. What I'm going to do is narrow down my search a bit and just look in the in-depth guidance here on the side. So this now only finds pages that are in that. So employment tax is always under the earnings section. So let's just have a look, see what comes up here. So this is talking about a car fuel benefit, which we don't want. Car fuel benefit again, which we don't want. Okay, so this is all to do with company cars at the moment, which I know is not relevant. So I need to refine my search criteria here. So personal car, mileage, reimbursement. Let's try that instead. So again, I'm going to narrow down in the same way into income tax and see whether something comes up here. So expense allowance, that might be relevant. So let's have a little look into this. So what I'm trying to do at the moment is find some guidance or some content that talks about the reimbursement of mileage in a personal car, so I can find the exemption, the rules around that. So let's see whether this talks about, oh, it does talk about mileage allowance. Okay. So let's just have a very brief read of some of the bits that are started there. So this looks like it's to do with an actual case. House of Lords in Pook v Owen decided by a bare majority that a mileage allowance paid to a part-time hospital doctor to cover the cost of travel from his place practical to the hospital did not constitute an emolument. Okay, so this actually looks like it's talking about whether or not it's a business expense or not actually. So I know that that's not relevant again to the mileage reimbursement. So let's try a different search. So sometimes this does happen. You won't find like the right terminology to search at the start of your research, and so you need to try a few different things until you can find the guidance or the legislation that's relevant. This is looking much more relevant now because it's talking about mileage payments in particular. So let's have a look at this. Okay, so this is looking the most relevant so far. So I'm going to have a little look into this. So this talks about employers may reimburse specific amounts per business mile driven in a privately owned vehicle without causing the director or employee concerned to incur a tax charge. Okay, great. This is super relevant. So we're starting to get some traction now on this one. So it says the maximum amount that can be paid tax-free is the approved amount. This is the business mileage for the tax year at the approved mileage rate. Okay, so the 45p for the first 10,000 and 25p for after that. So if I didn't realise before this that it changed after 20, after 10,000 miles to 25p, then no, I do know that. We found what I think is going to be the relevant legislation now, so I'll go have a look at that in a second. And so what I know prior to doing this research and before I had this query, I know that if there was nothing to do with the credit cards being used, I know that the company could pay the business miles at 45p per mile for the first 10,000 miles. I know that. What I'm not sure of is if the fact that they've used this credit card has impacted that basically. So now what I've got so far from doing a little bit of digging here is I've now got the legislation that I can go have a look at, and I'm going to go have a look at that in a second and see what it says and see whether I can piece together the answer from that bit. The reason I think we need to go to the legislation here is based on experience, is when you have quite a nuanced question like this one here, it's not a normal scenario at all, really. I mean, using the credit card is, but then trying to reimburse 45p for business miles afterwards isn't. I just don't expect guidance to directly address that question anywhere. And so my gut is telling me that what we need to do here is piece together the answer instead. So that's what I'm trying to do right now is I'm trying to piece together the answer to this question. So I'm going to go have a look at the legislation now because my gut's telling me that that's the way to get the answer to this quickly. So we're starting off at section 229I TEPA. What we can see is if I call this zooming out a bit. So I can see that 229 is within chapter 2 of part 4. What I'm going to do is open up the full chapter 2 because we might need to look at other bits that fall within chapter 2. And chapter 2 is all to do with mileage allowances and passenger payments. Great. So passenger payments isn't going to be relevant here, but other bits within that chapter are highly likely at this point to be relevant. So let's have a look at 229 then just to see what this says here at this point. So 229 says that there'll be no liability to income tax in respect of approved mileage allowance payments for a vehicle to which this chapter applies. Okay, so it says see section 235. So let's just have a quick look at that as well to make sure that we know what type of vehicle is relevant here. And so it says this chapter applies to cars, vans, motorcycles, and cycles. And it says car means a mechanically propelled road vehicle, which is not a goods vehicle. It's not a motorcycle or a vehicle not commonly used as a private vehicle. Okay, so we know that that's the case anyway. So it's just a bog standard car. It's obviously a car, even more so after looking at that definition. So I'm not going to look at that any further at the moment. Then it says that so I basically need to figure out what actually in this case is an approved mileage allowance payment. Can paying the 45p be that or not? So it says a mileage allowance payments are amounts other than passenger payments. So we don't need to worry about that, but that's saying to look at section 233. If we want to look into passenger payments, I'm going to ignore that because I know it's not relevant. So mileage allowance payments are amounts paid to an employee for expenses related to the employee's use of such a vehicle for business travel. Okay, so we know that they would be paying it in this case for business travel. It would be for the use of a vehicle in this case, so that would all be met. So that's okay. Um, three subsection three says mileage allowance payments are approved if or to the extent that for a tax year the total amount of all such payments made to the employee for the kind of vehicle in question does not exceed the approved amount for such payments applicable to that kind of vehicle. Okay, so we need to figure out what the approved amount is. We need to refer us to section 230 here, so we've got to go take a look at that. So it tells us that the approved amount for mileage allowance payments that is applicable to a kind of vehicle is M times R. And it tells us that M is the number of miles of business travel by the employee using that kind of vehicle in the tax year in question. So, okay, so that's just talking about the fact the amount of business miles these directors have done in their personal cars, and R is the rate applicable to that kind of vehicle. Okay, so then it says that the rates are as follows. So for a car or van, it's 45p for the first 10,000 miles, 25p thereafter. Okay, so we're all following this so far. But I'm still thinking, well, the fact that they've used the company credit cards, is that going to affect the amount that can be paid tax-free here? And so I just want to continue looking around this to see whether there's any immediate answer to that. So the reference in subsection 2 to the first 10,000, okay, so we don't need to worry about that because we don't really care if it's more than 10,000 or not. I actually know it was less in this case, so we can disregard the above 10,000 anyway. Um, there's no associated employments, so that's not relevant. There's just one. One thing I'll just note is that I've kind of glossed over it here, but there's a part in ITEPA that basically says that directors are treated like employees. And so I know that whenever it's referring to an employment, it's referring to a directorship. It means the same thing here. And also whenever it's referring to an employee, it's also a reference to a director. So I don't need to go and look at that, although I could do if I didn't know that that was the case. So control not relevant to what we're talking about here, and regulations not relevant. Okay. So right now, I feel like we know that they've done a amount of mileage, and we know there's a rate. So I feel like at this point that they should be able to reimburse it at that amount. Because when we looked at 229, what did it say? It said no liability arises in respect of an approved mileage allowance payment. It is an approved mileage payment because we've looked at this bit here. There's no payments being made at all so far. So this is the key bit actually, thinking about it now. So prior to any advice that we'd given this client, they had not made a payment. The company had not made a payment to the directors for use of their personal vehicles for business use. They just hadn't done that. The only thing that had happened is the company had allowed the directors to use a credit card, a company credit card, to pay for the fuel. So I think this is key word in here. So it talks about it's using the word payments all the time. So no liability to income tax arises in respect of approved mileage allowance payments. So it uses the word payments. Mileage allowance payments are amounts paid to an employee. So when they're using the credit card, there's no payment to the employee, right? There's a payment to the company that's selling the fuel to the garage, but there's no payment to the employee. So the use of the credit card is not a payment to an employee. That's hopefully everyone is on board with that as a suggestion. So the fact that it's telling me here that a mileage allowance payment is a payment to an employee, and I know that there has been no payment to an employee, if the company now makes a payment to the employee for the business miles in their personal car, that will be a mileage allowance payment as long as it's less than the 45p times the mileage, which is what we found out on this page here. What I'm going to do though is just continue looking just to see whether anything else crops up that might change my opinion or the conclusion that I've come to so far. The only last one I want to look at is this mileage allowance relief bit here. Maybe 232 as well, but I'll have a quick look at 231 just to see whether that changes anything. So I know that mileage allowance relief is it's connected to mileage approved mileage allowance payments. I know it's connected in that if the employer doesn't pay the 45p per mile for business miles, then the employee can go and claim it through the tax return. And so before reading this, I'm thinking this is what this is to do with. This is to do with where the employer doesn't reimburse the full amount. They might reimburse some of it, but not the full amount that they can reimburse tax free. So let's have a little read through this section then. So this says that an employee is entitled to a mileage allowance relief for a tax year if the employee uses a vehicle to which this chapter applies for business travel, which we've already concluded that that is the case, and then the total amount of all mileage allowance payments, if any, made to the employee for the kind of vehicle in question for the tax year is less than the improved amount for such payments applicable to that kind of vehicle. Okay, so how in this case here, so with a credit card, there has been no payment, there's been no mileage allowance payment to the directors, has there? There's just been the use of a credit card, which is not the same thing. And so right now, if the company does not decide to reimburse, make those payments for the mileage allowance payments, then it seems so far that there's an option for them to get relief under this section here. So 2312 says the amount of mileage allowance relief to which an employee is entitled for a tax year is the difference between the total amount of mileage allowance payments, if any, made to the employee for the kind of vehicle in question and the approved amount of such payments applicable to that kind of vehicle. Okay, so we know that the amount of payments made to the directors is zero because they've used a credit card, which is not a payment to the director, so zero, and we know that they could be paid 45p per mile for the business miles. That's something that we've already concluded from looking at the previous bits. So what we have here is that if the company doesn't make that reimbursement now, we can see that the directors would be entitled to tax relief on that 45p per mile for the business use. And so what this is essentially doing to me is just reassuring me that my conclusion from looking at 229 and 230 is actually correct in this case. So where we've got to here from looking at this, and I know I've gone over some things quickly, so please do feel free to ask questions even now or when we've got the Q&A bit at the end. But what we've essentially concluded is for tax, the company can pay 45p per mile for the business miles. Now, in this case, the company had been using the credit cards, the directors had been using the company credit cards for quite a long time, maybe 6 years or something like that. And so my thought was then, well, can we go back for that full 6 years or even 4 years, however it ends up being? Can we go back into the past and make that reimbursement for the past? Basically, that was a question I had because it was so long ago. I wasn't sure whether that reimbursement could be made in retrospect, essentially. So that's one question that I know I need to answer and check. So that's something we can do to the extent we've got time in a second. The other part of this is we've only looked at tax so far, but what about national insurance? I know that national insurance is completely separate to tax. The rules are completely different, and just because we've determined that it's not taxable, that doesn't mean necessarily that it's not subject to national insurance. So there's still two things that I want to check here. I want to check whether we can actually make this payment retrospectively, like years down the line. My gut's telling me that that should be the case because whenever you reimburse people for mileage, you might end up reimbursing them, say, a month or 2 or 3 months after. Like, as far as I'm aware, there's no restriction on how long ago you can reimburse someone something for. It just feels a bit different when it's years and not months or weeks instead, for example. And then the other bit to look through, as I say, is that national insurance piece. So the research isn't complete fully yet. We've got the tax bit or part of the tax bit. There's two other bits to still look at before we get to the final conclusion and can be happy that we've completed the research task properly. So what I'm going to do first, just because I think looking into the timing point is a bit more complicated, I'm going to flick onto the national insurance point first, and then if we've got time, I'll go back and look into the timing point, whether you can make that retrospective reimbursement or not. So for national insurance, then I need to now find the relevant legislation. So what I'm going to do is we've got an understanding now of some of the terminology here, like mileage allowance relief and mileage allowance payments. So I'm potentially going to search that in here and look for the national insurance guidance that can hopefully link me to the legislation. We also had this one guidance page earlier. So this is referenced us to ITEPA, but I just want to see whether there's anything on here that references national insurance for us. I'm looking for the highlighted numbers just to see whether there's anything there. Can't see anything. Let's just search the word national insurance, see whether anything comes up. So there is something. So it says the response stated that actual expenditure in relation to business miles could be reimbursed free of income tax and national insurance contributions. This is in fact only possible for volunteers. This doesn't even seem relevant right now, but some of it does. I mean, that's helpful to start with. That suggests that we should be able to do the national insurance bit as well because the rule should be the same. But let's have a look for some guidance specifically on the national insurance bit. So I'm going to search for mileage, allowance, payment, and then I'm going to search specifically now for national insurance guidance as opposed to tax guidance. So again, I'm going to stick with the in-depth guidance here. Rather than go down to income tax this time, I'm going to restrict it to just national insurance guidance, which we've got here. So by clicking that, it's only going to return national insurance guidance now. So let's have a look then. So that looks like it's going to be relevant. What I'm going to do is open up some separate tabs now to keep this organized. So is that national insurance guidance? Okay, there. So this is something I tend to do quite a lot as well, is now I'm looking at like a different avenue. I want to keep all the tabs that relate to that different avenue together so that it doesn't become really confusing and disorganized as I'm looking through this. So we've got car allowances bit here. Travel and reallocation may be relevant. Third condition, not sure what condition that's referring to yet. So out of all of these, based on the titles, this one seems the most relevant because it's got a reference here to a mileage allowance payment in particular. This is specifically on car allowances though, and I know that we're not dealing with car allowances in particular here. But what I'm hoping it would do is I'm hoping that this will link to the legislation that's relevant to the mileage. So let's just have a look what it says on this page in terms of mileage allowances. So this again is referring to ITEPA, which is tax, which I don't want. I want national insurance. So I'm just going to have a look through. So there's some, oh, here we go. Social Security Contributions Regulations 2001. So he's talking about class one. So I'm thinking that's going to be relevant. So I'm going to open that. So what I'd be doing now in real life if I wasn't sure about some of this is I'd just be reading through this page in detail just to try and get some hints of where I should go and look next. Now I found reference to some regulations which I know relate to national insurance. I am going to just go and have a look at that for now because that seems more seems highly relevant, and I think actually it is going to be the right regulation that we need to look at here. So what does Regulation 22A say then? So this is part of the Social Security Contributions Regulations. Okay, so this is we are in national insurance legislation now at this point. So let's have a look at what this says then. So it says, to the extent that it would not otherwise be earnings, the amount specified in paragraph 2 shall be so treated. Okay, so some background as well on national insurance that if something is earnings, it's subject to class one. If it's not subject to class one national insurance. So that's what this is talking about here. But this is talking about if it wouldn't otherwise be earnings, this will treat it as earnings, which is almost the opposite of what we want. But let's carry on having a look through. So it says the amount that is produced by the formula, so it's the amount specified in two shall be so treated. Okay, so if this formula comes out of a number, then that's going to be treated as earnings based on what it says there. So the amount is produced by the formula RME minus QA, and RME is the aggregate of relevant motoring expenditure within the meaning of paragraph 3, and QA is the qualifying amount calculated in accordance with paragraph 4. Okay, so there's some complicated definitions that are coming out here. Right now, without looking further, we're not sure on what relevant motoring expenditure is. It says it's defined in paragraph 3, so I'm going to have a look at paragraph 3 in a second. QA says that it is the qualifying amount calculated in accordance with paragraph 4. Okay, so we have got the two definitions nicely in this regulation, though, by the seams of it. So let's have a look at paragraph 3 first to start figuring out what RME is in this case. So RME says that it is a mileage allowance payment within the meaning of section 2292. Okay, so now we're starting to see some familiar terminology because when we looked into the tax bit, it used the terminology mileage allowance payment. Also, we were looking at section 2292 ITEPA. So there is some connection between the national insurance and the national insurance and the tax here, which is a good start. This is kind of a symbol that we're kind of along the right lines here. So that's a good start. So if it is a mileage allowance payment, it would be RME. Also, what else would make it RME? So it would be such a payment, but for the fact it's paid for the benefits of the employee, paid to another, so maybe paid to someone's wife rather than the employee directly. Not relevant in this case, so I'm going to gloss over that. Um, it is any other form of payment except a payment in kind made by or on behalf of the employer and made to for the benefit of the employee in respect of the use of the vehicle. Okay, so The only bit that's relevant here is this bit. So this is telling us that a mileage allowance payment is a relevant is a payment of relevant motoring expenditure. So we know that if we pay the 45p per mile, then it's going to fall within this RME here. So if there is not this QA to take off, we're going to have something that's treated as earnings, which we don't want. So let's have a look at what QA says then, qualifying amount. So for here says the qualifying amount is the product of the formula M times R, where M is the sum of number of miles of business travel undertaken. Okay, so we're starting to see something familiar and relevant again here. And without reading this in super detail, because it's quite complicated to go through, what this essentially says is M is the number of business miles that someone undertakes in a private car, and R is the rate applicable to the vehicle in question at the time when the payment is made in accordance with section 232 of ITEPA 2003, and if more than one rate is applicable to the classes of vehicle in question, is the higher or highest of those rates. Okay, so if I just quickly loop back to the bits in ITEPA so we can see what it's talking about here. So it's referring us to section 232, so which is that rates table that we looked at before. So we're saying R is the rate applicable to the vehicle in question. It's a car, so it's either 45p or 25p. But then it says if more than one rate is applicable to the class of vehicle in question, it is the higher of those rates, so it's 45p. So basically, what QA is, it's QA is the business miles times 45p, which means that this number here is zero, which means that nothing, because the RME is going to be the 45p times the business miles, and the QA is also going to be 45p times the business miles. So that's going to net off and be zero. So what this tells us is that there's no amount here that's going to be treated as earnings. Again, you'll need to do some research around this to figure out whether this payment would be earnings for any other reason. I've done that research before, and I know the answer to that is no, it isn't. But that is something that you would research too, to just join the dots together there and fully conclude that. And so what this tells us is that you can make a payment to, or what we've essentially concluded is that you can make a payment to the employee for the business miles in their personal car at 45p per mile, and it's not going to be treated as earnings for national insurance, which means that it's national insurance free. Good. So that actually gets us to roughly 30 minutes from the start. And so what I'm going to do is stop researching it there. But the last bit that I would be checking now in real life is I'd go and check the tax bit around whether it matters that we're making this payment in like years after the event potentially. I'd do the same with the national insurance bit as well, just to make sure. Where I'm at now is I feel like the answer to both is going to be, well, of course, because nothing we've seen seems to talk about the fact it needs to be paid shortly after or within a certain time limit or anything like that. But I'd want to make 100% sure before I advise a client on making a reimbursement that I'm saying is tax and national insurance free. It doesn't turn out to be, even more so in this case of this client, because the HMRC inquiry was there in the background. Lovely. So I'm going to open up to a Q&A in just a second. So please do get your questions in, and I'll go through those. Anything related to what we've gone through today, clarity that you need, anything like that. But just before we get there, I'm just going to quickly recap. So what we've done in today's session is we've gone through what my thought process is to tackling this real life tax query. But I suppose separate to that, how do you actually go from the start all the way to getting the answer for any tax query that you get on the job? So you can do so that you can do exactly that. I've established a 5-step process that you can use to do exactly this. And by knowing these steps, what you'll be able to do is you'll be able to tackle tax queries more quickly and easily. You'll know what great starting points are for your research. You'll have improved confidence that what you're doing is the right thing when you're researching, so you don't feel like you're wasting time and going in circles. And you'll also procrastinate and worry less. And these 5 steps, I teach all of them and how to do them in the tax research masterclass. A recent attendee said within a month of the masterclass, she was fully answering queries that she used to defer to colleagues. She also spotted a £2 million tax issue for a client, provided a solution, and her tax director decided to use her solution, which, in her words, felt brilliant. And before the masterclass, she was thinking about leaving tax because she felt too stupid to do these things. She was feeling stressed a lot, especially when researching things. But now she's proved to herself that she can do it, and she doesn't feel too stupid anymore. And in fact, she's actually smashing it, and I couldn't be happier for her. And if you want to get really good at researching tax queries as well and improving your overall technical ability in tax, the Tax Research Masterclass, is a streamlined way for you to achieve that. To take the masterclass or to look for details and how to join, just head on over to the taxprofessionalspodcast.com/TRM, which is on the screen now. And there's also a QR code for anyone that's interested in having a look into that. It starts on the 18th of March next year, which I do know is a long time away, but it will be here before you know it. And if your diary is anything like mine will probably be already fully booked in March or very, very busy anyway by the end of January next year. So what I'm going to do is I'll leave that on the screen now. I'll put the link in the chat in case the QR code doesn't work because this is the first time that I've tried using it. And so with the amount of technical issues I've had recently, it wouldn't surprise me if I'm going to have another one today with this QR code. But let's open up to questions, and I'll actually allow you to unmute your mics as well in case you want to speak that rather than type it. Cool. You should be able to unmute yourself now if you do want to speak, or put your questions just in the chat box. Oh, nice one. Thank you, Michael. Oh, good question, Tom. From what I know, the only negativity that I ever hear about Krona is the fact that they're really salesy, and the second they get your contact details, that they essentially pummel you with emails and phone calls to just try and speak to you. In terms of how good the online Krona system is to use, for me, it's the best one out of all the ones I've used. So I've actually got access to Tolly's as well, but I don't use it very often at all. It's very rare that I go to Tolly's. Chrono is typically my starting point. I've started using a bit of AI here and there in now, which I think is helpful as well. But again, typically I will rather start in Krona. I've got access to Ross Martin as well, but for me, they tend to be too. It's not in depth enough for me to use Ross Martin. I think being a specialist in employment tax, I tend to need detailed guidance, and Ross Martin is quite high level. I also know that Krona is expensive as well, which is another thing that people, I suppose, don't like about it. But for me, it definitely is the best resource that I've used generally for tax research. So Michael said that he also has Corona. It's very useful. Use it most days, especially for niche things. Yeah, the in-depth guidance for the niche things is great. I mean, do you use anything in particular on there, Michael, or do you tend to use the in-depth guidance as well? One thing I should probably say actually is if you fancy a free trial of Corona, I can actually allow you to get that. I've got a registration link that you can use if you want to give it a go. Um, I can probably send that around on the email afterwards as well. So Laura said she likes Corona. The last two firms I've worked for have switched to Tolly's, unfortunately. I'm not paying the bills, but I do hear Corona is pricey. Yeah, I agree. I think the priciness is worth it because it's so much quicker and easier to use than Tolly's. The amount of time that I used to waste using Tolly's, it's just not as user friendly. I think what's happened is this is somewhat me guessing, but I think what's happened is Tolly's for years and years was the market leader in like tax guidance and everything, right? And it was always in book form. They had the physical copies of the books, and they were really great. Then what happened is things started to move online, and I think all Tolly's really did was upload their books into an online form, and so they didn't really think about making it easy to navigate as an online source rather than a book instead. And I think as a consequence of that, it's clunkier to use than Corona is. Whereas as far as I'm aware, Corona has been designed purely for online. There are some books that they upload to it too, but I think that's a minority in comparison. So Paul has said that he heavily used both Krona and Tolley's. Both are good but have different strengths. The legislation is massively more usable on Krona. Yeah, I agree with that, Paul. What in terms of your use of it, Paul? How do you find that it's how do you use Tolley's to like get good use out of it? Because I find the search function and navigating it really clunky. Have you got any kind of secrets around that? So Chris has said that he has 283 unread Krona emails that are auto diverted to their own folder. It's ridiculous. Yeah, that's the negative that I've heard quite a lot. And Chris has said Krona technical helplines are excellent. Yeah, that doesn't surprise me either. I think the product of Krona itself is good. Their sales team is not great. So Bradley has said, I joined the call a little late as a meeting overran. Am I right in saying that there is a five-step process you use for researching? Yeah, that's right. If so, could you state what each step is? Yes, I can state them briefly now, Bradley, but without doing the deep dive around each one, you're not going to be able to do much with them, I don't think. But step one is basically figure out what the scope is of your research. So, what is it that you're actually looking into? What's the question? What taxes are covered? Similar things to that. Step two is to then go and look for relevant information that connects back to that scope so that you can start finding out the answer. Step three is to interpret and analyze and apply that information so that you can actually apply it to the scenario that you've got. Step four is to then make conclusions, and step five is to document it in written form. That's it at a high level. But if you really want to learn how to do that process and each step really well, the tax research masterclass is the best place for you to go. So Chris has mentioned, oh, and halfway through every webinar, they have a sales pitch, and the webinar always overrun. Okay, well, I'm actually doing a webinar with them in January as well, so maybe that will end up happening when I'm doing that session with them too. Lovely. I will give it another minute or two just to see whether anything else comes in. But if not, I hope you found the session useful. I know it's quite hard to go through legislation and everything live, so apologies if I did talk a bit too quickly and I kind of skipped over some steps. But hopefully there was still enough useful pointers and guidance to that you can take away and start using in your role.